All right, welcome back to Father and Son Investing. This is video number 2 for the day. We're going to talk about Matterport warrants. Video number 1 talked about the third quarter earnings report. So if you haven't watched that video, we'll put a link to that right up here, and you can take a look at that before you watch this video. Now, I had a question asking me about the Matterport warrants and when those would be flooding the market potentially. So I'm going to talk about warrants quickly, just what they are. We'll talk about the structure for the Matterport warrants. We'll talk about when that structure can start to take effect. And we'll talk about what may happen then if you are an owner of a Matterport warrant. Additionally, we'll talk about what the effect will be if these warrants are exercised. If you have not heard of a warrant, well, here's a quick explanation. With SPACs, there are common shares issued and typically a warrant as well. Now, a warrant just simply issues to the warrant holder the right to purchase a share of the company for a set price. So we can see in this illustration that there are 3 different structures with different unit prices, with different warrant exercise prices, and even with different amount of warrants issued with the purchase price. In addition to the exercise price, warrants also come with an exercise period. After that period of time, the warrant becomes useless. Now, there are different types of warrants as well. So public investors who invest in the holding company that will eventually merge with another company to make it public get public shares and public warrants. Sponsors of the holding company get founders shares and founders warrants, and the rules on these different types of warrants can be different. Now, one of the things to understand about warrants then with that exercise price is that there will be a place where the warrant is, quote, in the money, similar to the way options can be in the money. And what does that mean? It simply means that because the warrant has a certain price and the stock will have a certain price, that if the stock price isn't high enough to account for the additional price of the warrant, if you were to exercise that warrant, you would be losing money or out of the money. Once the stock price crosses a certain point, then the warrant would be in the money. So in the case of Lordstown Motors, the warrant exercise price is $11.50. The current stock price is $21.10. By the way, $11.50 really is the SPAC price that you'll see in most of these SPACs will be the warrant exercise price of $11.50. So in order to be in the money, the warrant needs to be $9.60 or less. Now, of course, this in-the-money price will change as the current stock price changes. Now, here's the other thing to pay attention to in these warrants. Typically, they will have a redemption call stock price, $18. In this case, that is the redemption call stock price as well for Matterport stock. What does that mean? All right, this is from the Matterport prospectus. It says, we may redeem your unexpired warrants prior to their exercise at a time that is disadvantageous to you, thereby making your warrants worthless. We have the ability to redeem outstanding warrants at any time after they become exercisable. We'll talk about when these warrants become exercisable in just a moment. And prior to their expiration, which for the case of Matterport warrants is 5 years. At a price of, get this, 1 cent per warrant, provided that the closing price of our common stock equals or exceeds $18 per share for any 20 trading days within a 30 trading day period, ending on the 3rd trading day prior to the date on which we give proper notice. All right, what does all that mean? So essentially, if you are a warrant holder, although you have the right to buy a share at $11.50 per share, once that price, the common trading price of the shares, not the warrants, but the shares, equals or exceeds $18 for 20 out of those 30 trading days, if Matterport chooses to, they can essentially call in those shares to be redeemed. Now, it's only going to be 1 cent per share, but it's not instant. So the warrant holder will have 30 days to make a decision. Now, what is that decision going to entail? So in this case, you're going to have 3 choices. Choice number 1 is exercise your warrant and pay the exercise price, therefore at a time when it may be disadvantageous to you, meaning depending on how much you paid for your warrant, you might not be in the money yet. Or you can sell your warrant at the then current price. If you're not aware, warrants can sell on the market just like stocks can. And the current price in the after hours market today is $22.04. I can buy the share of stock for $11.50. So we're looking at $22 as being the cutoff, essentially, for in the money. So we're a little bit in the money if you paid that much for a warrant. Now, if you were lucky and you bought the warrant 6 months ago and you only paid $3.18, you can see how you've been in the money for quite a while. So that was choice number 2. Sell your warrant to someone else, and they can decide what to do with it until that 30 days is up. Or you can accept the nominal redemption price, which will be 1 cent. Now remember, I said that sometimes the rules for these warrants can be different. They state in their prospectus, none of the private placement warrants will be redeemable by us so long as they are held by the sponsor or its permitted transferees. So those private placement warrants won't get this call like the public warrants will. All right, again, looking through the prospectus, the date that these warrants can become exercisable is December 15th, 2021. Where does that date come from? This is pretty much the way all these SPACs are written. Some of them are a little different, but this is kind of the standard, which is 12 months from the company's closing of their IPO. So for Gores Holding, it was back on December 15th, 2020. Now, sometimes the warrants will actually have another statement in there stating that it'll either be 12 months from the IPO shares for the holding company or a certain number of months after the deal actually closes that those warrants can be exercised. So you need to pay attention to what the prospectus says about your particular warrant. So just how many shares are there out there, and what is the potential number of shares that could come about if the warrants are exercised? So this is from their updated prospectus. We can see that the total number of shares, once we take into the account of the legacy Matterport stockholders, the public stockholders, the initial stockholders, and the PIPE investors, we've got almost 242 million shares. Now, in terms of warrants, there is an additional 11,350,000 companies, private placement and public warrants. So if all of these warrants are exercised, just from the warrants, there could be an additional 11,350,000 shares that could all potentially come into that share pool within 30 days should Matterport choose to redeem those, call in their redemption for their warrants at the 1 cent per share price. So doing the math, that's about 4 to 5% more shares that can be added to the pool. Of course, that dilutes the shares and will decrease the stock. That's going to wrap it up today for Matterport and the warrants. Hopefully I answered all the questions that people had. Please share this information with a young person in your life. And until next time, enjoy your investing.